title says that you need to double down on your winning streaks to make as much money in trading as possible. And I think this is key if you want to maintain a good streak and make the most of the times when you are destroying the markets. I don't want people to get confused. I don't want people to think that doubling down means 10xing your risk or taking more trades when you're doing well or once you've won 2 in a row. But that is definitely not what I mean. What I mean is you want to maintain as much momentum when you are winning as you possibly can. When you are losing, it can be quite easy to make mistakes. It can be relatively easy to make mistakes when you're winning too, but it's easier when you're losing because you want to get out of that losing streak and you think the only way of actually doing so will be breaking your rules or breaking your plan or trading when you probably shouldn't be trading or of a certain size when you shouldn't be trading that size. And this is a common mistake that many traders make, and it's all because of the psychological effects of losing in the markets. But there are also the psychological effects when you are winning in the markets. And the best way to actually maintain a winning streak and make the most of it is by doubling down on your winning. This can also be a way to avoid burnout, because many people experience burnout when they're trading because of losing streaks, because of tough periods in the markets, when everything just seems to be getting worse and worse. Or perhaps you are at a standstill. No matter what you do, you can't improve, and you don't seem to be losing money, but you don't seem to be making money. So you kind of feel like you are plateaued in your trading journey, and you don't want this. So you get burnt out. No matter how much backtesting you do, you can't seem to get out of this position you're actually in. So like anyone would do, you get burnt out. But an easy way to get out of this burnout phase is to reward yourself for doing something well. And this will compound into rewarding yourself to making good decisions. Then you'll want to make more of those good decisions, which will then make you win more. And once you win more, then you can double down on winning even more. So when I'm talking about burnout and rewarding yourself, what I mean by this is when you are journaling your trades, when you are backtesting, when you are even live trading, you want to have journaling. So you don't really have to journal every single backtested trade like you would a live trade, but as long as you are following your plan, you should give yourself ticks. So every single backtested trade you go through, you go tick, tick, tick for all the things you need to do when you are actually looking to enter a trade. Do you have, maybe it could be your top-down analysis, or do you have your entry confluence? Has price broken structure in the correct session? If all of these things are ticked and you're seeing progress from this, and obviously if you are making the correct decisions, you're more likely to win than lose. And if you're making the wrong decisions and you're not seeing those ticks, it can be quite easy to see why you are losing. But many traders don't track themselves as a trader, so they end up losing long term. And as someone who teaches hundreds of traders how to trade, this is a common mistake that I actually see. Traders will make mistakes and they won't realize they're making the mistakes because they don't actually record themselves as a trader and the decisions they're making, so they will never know that they are losing. And not losing just with their money, but also with their mind and how they are actually acting as a trader. So moving on to the main point of the video, and this is about momentum. You often see people talk about it in the investing world, and this is compound interest. So that money you put in now, that's a £10,000 investment, in 30 years will be worth millions. And this is quite easy to see because if you make 10% one year, you're then making 10% of the original amount plus the original 10% gain, if that makes sense. So your 100K account after 1 year would only be up to 110K, but the second year you're actually up 121K instead of 120K because of the compounding effect. And this is what people don't realize, how effective it is with you as a trader making those small wins. My best moments in the markets have been when I've doubled down on everything I'm doing. So let's say I am on a winning streak and I've had a good few months. You need to double down. You don't need to double down when you're losing because this can make your losses twice as bad. So you do not want to be doing that. But if you have been winning, you have been doing really, really well, you're making lots of money, or perhaps you're just winning a few trades, this is a great time to say, okay, I need to fully focus now and make the most of the streak I have in the markets. When you're backtesting, you'll likely realize that a lot of your profits will probably be made in 3, 4, 5 months of the year, or potentially even 2 or 3 months of the year. So you need to recognize what is happening during those months to allow you to double down, to allow you to maximize the profits you are going to make during these periods. And if you know based on 3, 4, 5 years of data that all your profit each year is made out of those 2 or 3 months of profitable trading, then it can be quite easy to recognize if I win 3 trades in a row, the likelihood is this next trade is going to be a winner, or the next 4 trades are going to be winners, just based on data. And And if you're trading based on data, you have a higher probability chance of knowing what's going to happen next. And obviously we have no clue what's going to happen next in the markets, but we can give ourselves the best opportunity possible to maximize the outcome of what is going to happen in the future, even though we can't predict it. So it's very, very easy to notice that if you look at your data over 5 years, and after 2 losing trades, the chance of you actually winning the next trade is 90%, then you don't need to reduce your risk. You don't need to lower it because you want to reduce the amount of drawdown you're going to have. No, you can maintain your risk because you know that this is going to win. The likelihood of this winning is higher than it is losing, just based on data. And it could be that the small 10% chance of it losing does actually happen, but if it happens 90% of the time where it wins, you're going to benefit much more than you would if you were preparing for the worst case scenario on every single trade in this particular situation. One way that I like to maximize my profits is by scaling into my positions. If I'm on a really, really good streak, I have lots of A+ setups, and I'm doing really well in the markets, what I'll do is I'll scale into my positions to double my profits on every single trade. An easy way I scale in is to trade the exact same opportunity that I entered on the trade originally. So let's say I'm using support and resistance for this example. Price has broken structure, retested the support, and now I'm buying. If that trade then breaks structure again, retested support, and I buy again, and then it goes up to my take profit, I've done really, really well on this trade. And it means that I've doubled my profits. But I'd only do this if I'm on a winning streak. Because if I don't have profits to play with, then it'll just put me deeper and deeper into drawdown if I do lose both of those positions on every single time I try to scale in. So what I see people trying to do is I obviously have my scaling plan for prop firm challenges, which I've talked about many times on my channel before. You guys can probably go and find a video on that on my channel. But what I see traders trying to do is trying to replicate my way of scaling into prop firm challenges when they're not in the same position. They might be down to their last 2% of drawdown, then they'll try and do a miracle trade trying to pass their challenge by using my scaling plan. But what you have to realize is that it only works when you are winning. If you're risking more and adding risk onto your trades, you can only do this with a buffer because you are essentially using your profits to make more profits. So let's say on a prop firm challenge, you're up 5% and you have to make that 10%. This is when it's okay to risk 1.5% or 2% on a trade because worst case scenario, you're still up 3% and you still have that profit buffer before going into drawdown. Whereas if you're down 5% and then you do this and lose 2%, you now only have 3% to play with. So instead of having that larger amount of buffer and the profits to actually double down on, you can't do this because you have that drawdown restraint that you can't go past. And it will make it a lot more difficult, especially on your mind, knowing that I only have a couple more opportunities to actually pass this challenge before blowing it and having to restart over and over again. So when I am in profit, whether this be on a prop firm challenge or on a funded account, for example, you're going to have the situation where you want to maximize your profits. And what you'll see is a lot of people on the prop firm leaderboards, they've got there because they're maximizing their winning streak. And you won't see them on the prop firm leaderboards again, or for a few months, let's say. And the people that are able to do it consistently are probably just elite traders. That's just how it is. But a lot of the times you'll see people, they'll get a 6-figure payout, or even a 7-figure payout like some people have actually received. This is because they're constantly scaling in and maximizing and doubling down on their winning streak in the markets. If they double down on their losing streak, they just lose twice as much. But when you double down on a winning streak, you're able to make an insane amount of profits. That then means that during those normal losing streaks, when you're preparing for actually losing, it's okay because you've made so much, an obscene amount of money when you're winning that it doesn't really matter. And I always give this example is that one payout from a prop firm that I've actually had, let's say a $20,000 payout, actually covers me for 40 future challenge attempts. So $500 per challenge attempt, let's say, using a conservative figure there, and I can take 40 challenges before I'm break even just on one of my payouts. And what do you think the chances of me failing 40 challenges without getting a single payout is? It's not a very high chance of me actually doing that. So I want to give myself the best opportunity possible of making money from prop firms long term. And what you'll notice is when I actually get prop firm payouts, when I do really well trading with prop firms, is when I've doubled down. I'll get loads of payouts in quick succession. It won't be one every single month that's, for the next 24 months. No, there'll be like a 2-month period where I go full on trading with prop firms. That was my full focus. I'm doubling down, 100% effort. That's when I make all my money. Then it means that the rest of the year, if you do make money, that is great. But also, if you're break even, you're still up loads for the year. And it is hard to be 100% focused and to double down 12 months of the year every single day because it does drain you. And seeing those large profits going up and down can be quite deceiving for your mind because numbers on a screen, you don't really get the sense of how much money that actually is. And especially with prop firms, it's not your money until you get that withdrawal. So it doesn't really feel like money. It feels like a demo account, which it is obviously, but you do get the profits. So doubling down on prop firms, I think it's easier than doubling down on personal money, because if you lose $500 on a personal account, you're losing that $500. But on a prop firm, you don't lose that, which is a great feeling. So it's easier to double down on prop firms than it is on a personal account from my own experiences. So if you do want to make obscene amounts of money in trading, you do have to sometimes make the most of your winning streaks, but not increasing your risk when you are losing to hopefully get out of drawdown, because that is when you can make your drawdown 10 times worse without even knowing it. So I'll catch you guys in the next video.